going to the house. I guess you need some life insurance.
I started
I guess you
recording.
need some life insurance, right? Yeah. I guess you need some life insurance, right? And then, I don't know, just everybody's kind of got their different approaches, but yeah, no, this was good. And she was just like, yeah, absolutely. And this was the 47-year-old that I told he was on disability. And so I couldn't, obviously we're not going term. And she has she's got 3 kids. She's got special needs. She's got an 18-year-old and a 12-year-old. And
this is all over the phone?
Yeah. Uh-huh.
Why are you doing? I mean, is there a reason you're selling over the phone?
This was just a one kind of rare thing.
Okay. I mean, I that's fine. We can do it. It just, I mean, I know you're young and don't have kids, and I prefer getting out and seeing people.
Right. So yeah, just forget this one instance. So let's just act like we're going into the house. Let's just start over if you want to do that.
Do you want to do your in-home on me, or do you want me to do it on you?
Do it on me, because I think I learned more from what the questions that you were asking, and I didn't really know, because I was giving you the kind of pullback that I'm accustomed to getting, and you're just kind of digging deeper and deeper and deeper.
Yeah.
If that makes sense.
Do that again. Keep in mind who you want to be or whatever you want to give me.
Okay, so let's just start from the beginning.
Okay, so I won't go through like building rapport and all that, but I will say, like I said last week, that the best thing you can do is get it, depending on their age. I mean, get them talking about, if they're married, talking about how they met each other, where they're from. No, if they're not married, where they're from. I mean, that's the easiest thing to say when you first walk in the door. Hey, how long have you lived here? I mean, whether it's a nice house or not, how long have you lived here? 5 years, to 1 month, 6 months. Where'd you come from? Up Detroit. Okay, so it's a little bit warmer down here, huh? I mean, I say that in it seems like everybody's from Detroit or Chicago, down in Georgia, in Columbus, but wherever they're from. I mean, if they're from down the street, okay, so you've lived here your whole life, huh? Born and raised. Seen a lot of changes here, I take it. I mean, they just talk like that line. I bet you've seen a lot of changes. We'll get them talking. And whether it's about where they're from, if they've lived there, or I'll get into like what they do for a living, if they've done that for a long time, if they're a military person, you better figure it out and tell them thank you for their service. That's an easy layup right there. If you miss it, they may not care, but they could. And it's kind of like saying yes sir, no sir, yes ma'am, no ma'am. I mean, it's one of those things where most people don't care, but some of them do. And if you don't say that, they're not going to like you right off the bat. They're going to think you're disrespectful. So just say it every time. Just get that out of the way. So anyway, then once you get into business, all right, Graham. So I could sit here and talk to you all day, but obviously we got, I don't want to waste your whole day, and I got a lot of people to see. So this is the form that we got. Obviously, you filled this out. You remember filling this out?
Yeah, my wife did.
Okay, is your wife's here?
Yeah, I mean, let's act like she's at the table with us.
She has to be. If she's not, then I'm leaving, rescheduling.
Yeah.
So
yeah.
Okay, so we're just gonna pretend she's there. Just play. You're good at playing a wife too.
Yeah.
All right. So Mrs. Graham, so you filled this out? Yeah. Okay. So I do a lot of things. We do mortgage protection. Obviously, we do regular life insurance, do final expense. We do Medicare. We do retirement planning, retirement protection. When we get these things back, usually you're looking for something that if you die, it's gonna help you stay in the house. Was that kind of what you were thinking?
Yes. Yeah. When I saw it and yeah, big grand scheme thing. Yeah, we need that.
Okay. So here's the point of meeting with you today. That this is not a one size fits all deal. Everybody's different. And the whole reason of meeting with you, first of all, we got to figure out if you need this, because I'm not here to sell you anything. If you don't need this, I'll be out of here in 5 minutes. Fair enough. And
Okay.
if we do determine that you need it, then I represent about 30 different companies. They're all a little bit different. And the goal then is to figure out which plan makes the most sense for you guys and fits your budget the best. Makes sense. And then all we can do today
Okay.
is try to get you qualified. You can't pay for anything today, even if you wanted to. Sound good?
Okay, cool.
Okay. So
Yeah.
first of all, do you have any other life insurance?
Yes, we already have, plenty of insurance. Like I said, when I saw this thing we got it from the bank, and obviously we read it and thought that it would be something that, wouldn't hurt us if we got the information. So yeah, that's why we wanted you to come over.
Right. Okay. That's what we're trying to figure out. So you have other life insurance?
Yes. Uh-huh.
How much coverage do you have?
I've got, what is it? I've got 200,000 on me and him through my job, and then he's got I think he's got $1 million on him through his job.
You think he has $1 million?
That's what we have through our jobs.
What do you do for work?
I'm a nurse, and then he works for the city.
What do you do with the city?
He does construction.
Damn, they pay $1 million a year to do construction? Oh no, that's your life insurance. How did you get $1 million on your job though? Usually they only pay like 2 times your salary.
What do you want me to say? I don't know.
No, so that's exactly how I do it. Like right now on the surface, they're saying they're not buying from me, and okay. I'm playing along. I'm not trying to come off salesy. I'm just asking questions, because if it all lines up and they don't need it, I'm telling the truth. I will be out of the door. But I just know that it's just, when you roll the dice that many times in this business, 99 times it's going to come up. I mean, it's basically like, how many times are you going to hit double ones if you roll two dice? I mean, that's how many times you're going to run across somebody that does not need the coverage. So they're basically telling me they don't need it, and the only way you're going to get over that objection is by agreeing with them, and then just asking questions to make them uncover the fact that they need it, and that's the only way you can do it. So you just told me that Graham has $1 million, Mrs. Graham, that Graham has $1 million at his job, and then I asked, well, how did you get that much at your job? If you don't know the answer to that, I'm like, guys, do you have any proof that he's got that much coverage?
Yeah, HR gave us gave me a booklet. I mean, it's up there that they have it in the break room. I don't know.
They have it.
Let's say I'm a civil engineer for them. That'll be better.
Either way, that's the most. I mean, if somebody told me that they had $1 million on their job, I don't believe it, and I'm never gonna tell them I don't believe it, but I don't. I've got to ask questions.
Let's lower it then for this instance. Let's just say I've got 200,000.
Yeah, but you learn from that, because that's how you overcome it. I mean, that's how you get to the bottom of that story. They may think they have $1 million, but then you find out it's only accidental. That could be what it is.
Okay.
So, all right, but if you want to go through. So change it up. So first of all, do you guys have any life insurance?
Yeah, she's got 200 through her job at the hospital. She's a nurse, and then I've got about 300 on me. That's what the city gives us.
So just through your job, nothing that you own?
No.
If you retire,
when you say own, what do you mean? I mean, I own that policy.
So if you stop working there, it goes with you?
Yes, that's what they told me.
Do you know if you have to pay any additional amount?
I'm pretty sure it stays the same rate whenever I leave. That's what the HR told us when we were having the meeting.
Okay, I would ask for something in writing for that. And that's
Okay.
fine. So I'm thinking in my mind, like 200,000 is not, how old are you, Graham?
30.
Or just use whatever, whoever works.
45.
So if you're 45, 200,000, I mean, I'm just gonna, they need that. I want that to work for us. So I'm like, I hope they actually have that. I just want them to understand that they don't own it. They definitely don't. It's a group policy. So like if you don't actually have the policy here, or they didn't like issue you a policy, you're not the owner. So that they can change those terms whenever they want. Not saying they will, but I've seen it done many times. And so just know that. I mean, it's fine. We'll put it on here as like a, maybe you have 200,000.
Okay.
So, okay, 200,000 on both of you. Is that what you said?
Yeah. Mm-hmm.
Okay, so you might have 200,000 when you need it. Anything that acts like life insurance, savings, 401ks, IRAs, anything like that?
Nah.
Okay, you don't have any retirement plans?
They give us a 401k, but it's not worth even writing home about right now. I've changed jobs so many times.
You're not putting anything into it?
I think I put about $100 into it each month.
Are they matching that?
Up to 50%.
Okay, so that's good. I mean, put as much as they'll match. If they're matching 50%, that's, do that. That you can't beat free money.
Okay.
And that's another thing that we do is help people with their retirement. So, but you guys aren't in that case. So basically 200. So how much money stops if you die? How much income are you bringing in?
I bring in about 4,000, and then she makes about half that.
4,000 a month?
Yeah.
2,000 a month. So 6,000 a month?
Correct.
And you're basically spending it all, because if you're not putting anything away, that's eating up all your bills.
True. Yeah. There. Yes.
And then you owe 200,000 on this house. Is that right?
Yeah. Right now.
Okay. So you have 200,000. Let's just say we use there's two reasons people get life insurance: is debt reduction and income replacement. Okay, so typically work insurance would fall under income replacement. If you're making $4,000 a month, that's roughly 50 grand a year. So that's 4 times your income. That's about the most I've ever seen from a job, but it's usually 2 times. We'll just go with it. So 200 grand, 4 times your income. All right. So you've got to, obviously, if you diagram, that income stops. A lot of people don't realize, they don't think about this. They want their debts covered, but they also don't realize, like, yeah, if you have your house paid off, that's great, but you still got all your bills coming in. And Mrs. Graham, the only bill that stops if he dies is his food bill and maybe medical bills if he's got any. And
okay.
So if you want to maintain your style of living, you got to have something to cover your debt and your income. I could argue that you've got 4 years of it. I mean, I don't think that's enough, but you don't, if you use that to cover your debts, you don't have any income replacement, right? So you need more. Like,
yeah, I mean, we that's why we fill this thing out and send it back. I mean, we know we need the insurance. We're just on, we're on a tight budget. We got car payments. We got some credit card bills that we're trying to, pay off. And, we know we need this. We just,
okay. We'll make sure that it's comfortable for you here. And there's another thing too, is that you're 45 and you don't have anything that you're like, do you have any plans to pay off? You mentioned your credit cards. Do you have any goals of paying off the mortgage early, or do you have any retirement?
I'm I'm kind of we take it day by day, man.
Okay, so we just need something cheap. Get as much
Right.
coverage as we can get you for cheap. Is that what you're?
Right.
Okay.
Right.
Okay. So then that tells me right there. Now that's not that likely that they're that strapped for cash. If they're 45, that's usually a layup. That, and I'll write something with a cash back option or the IUL Express. But he just laid it up where it's like, all right, we just need something. So I'll probably do Prosperity, that new term they got. And that should just be a lay me down sale. Probably not a big premium, but it's going to be an easy sale. But the next step I'd say, so Graham, you mentioned money's tight like 5 times already. So we got to make sure that this is comfortable for you. And I don't want to waste all day showing a bunch of prices that don't make any sense. So have you thought about what you could afford? What would be comfortable for you on a monthly basis where you don't have to think about this every month that it comes in? Have you thought about that at all?
Drew, I have no idea. This is the first time we've even discussed it.
Okay. That you shouldn't. I mean, it's kind of weird if you talked about this very often. Like you don't want to talk about you dying that frequently. So it's okay because I do it all day.
Or as they always say, I'm not planning on going anywhere anytime soon.
Right. Well, if you had to, and let me pull this up because this is right where I will start to go over this because this adds value. Now. Oh, that was the thing that I talked about last week.
You got your non-disclosure agreement up there too, Drew?
Hey, y'all can disclose whatever you want. If I always tell you, like, I'll tell you exactly how I do everything, and I'll still beat you.
Is that your dog?
The barking?
Yeah. Isn't it Moose?
Yeah. I think that was actually the other one. That was Winnie.
Didn't you say Bobby Cox gave you Moose?
Moose, yeah. Moose is Bobby's.
I hope we signed Freddie Freeman back. Everything I'm seeing on the internet showing that he's either going to the Yankees or the Dodgers. It's kind of off topic, but
I don't even know if they're going to play. I mean, heck. Okay, can y'all see this screen up here?
Yeah.
No, this was the first one that I found, Mutual of Omaha, but I have the same exact thing that says Kansas City Life. And even now we got Prosperity. I still pull this out and say, I know it says Mutual of Omaha, but these are all the same, has the same exact features. I think you're probably best suited for Prosperity just because they're a little bit lower on the price. But it has all the same stuff. So I'm just going to explain how this works. All right. So the way that this works, you get to choose your beneficiary. And let me just start by saying this might be the most important part of the process. I didn't have time to go over it last week, but this is where I really weed out any possible objections that could come up. And I know them all. I know what you're going to say. There's like a list of, and I'll go through what you could possibly say at the end. I'm going to cover every one of them before you can even come up with it. So that when you do come up with an objection, I've already covered it and you can't object. Like if you're going to object, you will right now, and I can deal with it before we get into going prices. So here's what I mean. So Graham, this is how this thing works. You get to choose your beneficiary. So this is not the old school type of mortgage protection where the bank was the beneficiary. That's not how this works. This works more like life insurance, where it's if you die, obviously Mrs. Graham's going to get a check. If you both die, it'll go to probably one of your kids or maybe your dad, your parents, if they're still around, brother, whatever. But you get to choose. That's very, very important. It does not have to go to the mortgage, even if it goes to your wife. You guys might be in a position where she doesn't want to stay here. Too many memories. I mean, that's very common if it's been a few years. So that's super important. She's got options. Okay. So know that, like, it does not have to go to the bank. It's not like the old school. Why I'm doing that is because I'm distinguishing. I just said this works just like life insurance. It is life insurance, but if they can't now tell me, oh, this is just life insurance. I just told you that. So So there goes that objection. So yeah, this works like life insurance. It's the same thing. You get a check if you die, blah, blah, blah. It's portable, meaning that if you move, Graham, you don't have to requalify for this. And again, very, very important. That life insurance is, here's the thing, money does not buy life insurance. Okay. Your age and your health buy life insurance. As you get older, if God forbid you have any health issues, it becomes very difficult to get life insurance. So if you ever move or if you refinance and you still need this coverage, with the old types of mortgage protection, you lose it. You have to requalify. This one you don't, stays exactly the same. Make sense?
Yeah.
Death benefit remains level. So that's another thing. You lock it in, nothing's going to change. So we don't necessarily have to cover the full amount because it will stay level. And the key is to make sure that you've got a level protection and it's not going to decrease. The old kind of mortgage protection that would decrease with your mortgage. You keep paying the same amount, but your coverage keeps going down. That's not a good program, in my opinion. This one, you pay the same and it stays the same. So you pay the same, it stays for the entire term, it will stay the same. Guaranteed rates, so you lock it in, nothing changes. There's a lot of stuff out there that sounds good. This is probably along the lines of your work coverage. I would bet if we dug into it that the rates are not guaranteed and they probably change maybe just a little bit every year for you now, but as you get older, it's more significant. And especially if you leave your job, it becomes very substantially different every year, every 5 years. You may get stuff in the mail that says anything you see on TV. You may think that this coverage is going to cost you $20, and we can get it for $20, but it's going to, like one of these plans that it's only $20 this year, then it goes up. I'm not a fan of that. I think it's important you lock something in and it just stays the same. So that's how this works. Every rates are guaranteed and the benefit remains level. Make sense?
Okay. Yeah.
All right. 24-hour coverage, accident or covers everything. Accident or if you have a heart attack or if you get run over by a truck, hit by a teenager texting and driving, it doesn't matter. It pays no matter what. Now, in y'all's case, I do think it's accidental coverage is good because it's so cheap, but you probably see stuff that comes in the mail all the time where you can cover this mortgage for $10 or something, whatever. And we, you can for accidental purposes. And you guys are so young, that might be something I'll show you. But this base plan covers everything. So don't have to worry about what causes the death. All that matters, if you die, it pays. Common carrier death benefits. So if you happen to die on a plane, on a whatever, where you're paying a fare, plane, train, taxi. I guess they don't really have taxis anymore, but whatever. If you had one, it pays double the death benefit. So kind of neat. I mean, it's obviously not something that you really want to think about, but they have this unemployment waiver of premium. If you lose your job, they'll waive the premium for up to 6 months while you're finding a new one. You don't have to worry about paying for this thing while you're out of work. So that's another good feature. Residential damage is kind of strange, but you guys live in Alabama, get a lot of tornadoes. If your house ever gets more than $25,000 of damage to it, again, they'll waive the premium for this policy for 6 months while you're worried about all these other things. You're not going to lose coverage. It's just good to know that. This is my favorite part of this policy, though. Living benefits, most value that you can find. So you don't have to die for this thing to pay. If you have a chronic or critical illness, for example, if you have a heart attack and you live, this will pay up to 90% of the death benefit. So for example, if you get $200,000 of coverage and you have a heart attack tomorrow, this thing is going to cover you $180,000. You can take it out and just be done with it. I mean, obviously, even if you don't have to take it all, you don't have to take it all out. You can take out, let's just say you have a heart attack and you've got to take 6 months off of work. And then you've got some medical bills that are not covered by insurance. This thing can help. You can take $10,000 out, 20, whatever you need. But the important thing is that you don't have to die to use it.
Does that do anything to the death benefit if I did do that and took out 10,000 or whatever amount I chose?
I mean, it reduces it by whatever you take out.
Okay, I understand.
but it's cool because it's not just if you die. Like a lot of times I'll hear people your age are like, they're not so worried about dying tomorrow, but there is a chance, a much higher chance that you have a heart attack or if you're diagnosed with cancer. I mean, the longer that you go, most men, you start getting into your 50s and a lot of them get prostate cancer. And that's treatable. That's good. But that will pay in this case. Like you can get, that will qualify. So it's it's just a great thing that can help you in those kinds of events. It's not just if you die. That's another very important factor, because when you get your life insurance on your job, and maybe you've got health insurance too, it doesn't pay you extra when you get sick. It might cover your bills, but this is going to actually pay you. I mean, it could pay off your whole loan, pay off your whole mortgage. So anyway, critical illness too. I mean, chronic, if you can't do 2 out of 6 daily living activities, they will pay in that scenario. Terminal illness, if you find out, God forbid, that you're terminally ill, you can just take out the whole policy. Use that money to make for whatever you maybe go ahead and pay everything off, knowing that you're leaving your family behind, and you do that for them, or go try to find a cure. If you've got a weird disease, go see if maybe you can take your 200 grand and go to some other country, and maybe they can get you better treatment. Whatever. The point is that there's other options to getting the money out before you die.
Okay. Now, hey, Drew.
Yeah.
Now, let's say you've covered all this, and you can kind of tell from their body language they're getting a little tired. So let's go through all right. So yeah, all that sounds good. So what's this going to run us?
Yeah. Well, first of all, if they're getting tired, then you didn't do it right.
Well, you know what I mean. If maybe they're not tired, let's just say, okay. So what is this gonna run, Drew?
Yeah, we'll get to that in a second. I don't like the question, because if somebody said that to me, it tells me that they're not, like, something's off.
Okay.
Because that probably would have come up like halfway through. I mean, earlier on, like, yeah, what's it cost? I'll be like, hold on, you don't care about the benefits that come with it?
Well, yeah, sure.
I mean, that's just rude. Like, people don't do that. So if they're doing it to you, I don't know. So somewhere along the way that you guys had a disconnect. Like, why would they stop? Nobody does that. There's some, I mean, I usually go through it faster than what I just did.
Yeah.
But I make sure to hit on especially these key points, because that's going to separate when it comes up that if they happen to say it's whatever, I can get this cheaper somewhere else. That's where I've already set it up. Like, you might be able to get regular life insurance cheaper. Now, a couple of things about that. First of all, we do regular life. I mean, I can show you a rate that's half this price. I don't want to, because those things involve doing a physical, which takes forever, especially in today's COVID days. And it's also, if you have, they're going to find something that's wrong with you. I mean, they're going to look for something, and they will try to find something wrong with you. If you take blood pressure medicine, Graham, I mean, if you're not getting a preferred rate, so there's no point in doing that. I'm not going to show you something I mean, that's what those people are doing. They're showing you something you can't get. And I don't think that's a good way to do business.
Right. Okay.
Now, here's what we can do. We can get this in place, make sure you have it. Then if you want to try to apply to get the better rate, we can do that. But let's start here. Does that make sense? I'm more interested in getting you coverage rather than finding out what's wrong with you.
Right. Sure.
Okay.
That's pretty good. That's pretty good. I've never heard it like that.
Yeah, that if I ever get, like, I can get this cheaper somewhere else, I go to that. And if I don't get that objection, I bring that up still, because while I'm closing out, I'll say, like, now here's the thing: if you guys talk to anybody else, if somebody says they can get you a better deal, trust me, this if you compare apples to apples, this is the best thing out there. There is nothing that will beat this. Apples to apples.
Well, I like what you said just a second ago. I more so want to see if we can get you coverage and see what's wrong with you.
Yeah, and I say that too, as once we once I get into the showing prices.
Right.
But
Because
even
I
if I
mean,
don't
like
get that objection or anything, I still also say the thing at the end where I'm like, this is just, if you happen to hear from another person or TV commercial or letter that there's something out there that looks like it's half the price, please call me, because it is not the same thing. I promise you. And I can show you apples to apples. There's nothing that beats this. So just please make sure that you call me, and I'll say that on the way out the door if I hadn't said it already. But I get to hear, and then you've clearly made it clear in your case that return of premium is not. I mean, we got to get you as much as we can. So I'm not even going to show you a return of premium option in your case, but in a lot of cases I do, because I think if for a 45-year-old, if you're not doing a return of premium, you're crazy.
right.
And I may look at it and just see that if it's basically $10 more a month, I might show it to them. But I'm trying to, so then I flip it over and I show, all right, Graham, here's the thing. I'm going to show you a couple options. The first thing we got to determine is rather than just write down a bunch of numbers, like, have you thought about what you guys are comfortable with? This is how I got off track before, but back to have you thought about what you're comfortable with in terms of a monthly payment?
No, we haven't thought anything about it until we sat with you.
So I assume that $500 a month would be too high. Would that be correct?
We're not going
worry,
there.
It's not going to be $500. I just making sure. Would $200 a month be too high?
I mean, yeah, probably. Really just depends on what the benefit is for the amount of cost.
Well, if you can cover if $200.
I've never really done it more so like that. I've always I don't know. I've never really done it.
Well, you should start. You will sell a lot more.
Okay.
This is how I get such high premiums, because and this tells you right now, like, if somebody says something like, it depends on how much coverage we get. I mean, hold on, Graham. So help me understand. What you're comfortable with spending only depends on how much you can get for it.
Yeah, I mean, if it is only like $50,000 and it's,
well, I mean, just from that logic, then you should be able to spend $500 if it can cover the full amount, right?
No, I would not want to pay $500 for that. No, I would just invest that elsewhere.
Where would you invest it?
I don't get the F out of my house. No, I'm just kidding.
Maybe. I mean, but hey, I'm not going through with show. I'm not going to lose that battle. I mean,
right.
Psychologically, that's a big deal. That might be right where we ended. I mean, I get up and leave, but I never showed them what I had. I never showed them any prices. I didn't miss that sale.
Got it. Okay.
If I get somebody, but usually they fall in line. Like, so if I say, you don't give me an answer like it depends on what we get, it's you just don't. I mean, I don't get that.
Honestly, Joe, I'd like to stay under 100. Probably. I mean, I can. We could handle 75, but that's about it.
So, okay. All right. So make sure that we can get you. Now that's probably not going to cover the full amount, but it's a good place to start. I mean, you guys don't own any other life insurance. You need somewhere to start. At 75, yeah. Maybe even we can get it as low as 50. I'll show you a couple options.
Okay.
That sounds good. 70, somewhere in that range.
Yeah, sure.
So that's what I'm going to do. Maybe it's only $100,000 that they get, but I can't even tell you how many times I've been in a house where I walk out with a $75 check, where 99% of agents would have missed the sale, completely missed it.
Now, if
you would have shown them the full amount and freaked them out. And I do the same thing, by the way. I'm doing the top down concept. I just don't commit to like, that's what it actually is.
No, but what I'm asking, sorry to keep interrupting you.
No, I think it's good, because that helps with you learning, at least, maybe not other people following it.
If they say the $75, and you run your quotes, and that's, they finance their mortgage for 30 years, but it's, that $75 is only covering them for 10 or 15 years. Do you really, like, how do you tell them
No,
that?
I don't do that. I don't play around with the 10 or 15 years. At the minimum, I'm
Okay.
doing 20. 10 years is nothing. I mean, what's the point of getting a 10-year term? I don't, that's get that out of here.
Okay.
And I don't change that. So it's the amount of coverage that I'm either going to show them, like, all right, if we're really dealing with a tight budget, I'll probably go with 20-year, because it's typically significantly cheaper than a 30-year. They're not going to find much better out there. And it's just a solid round number where it's that when there's a budget issue, I'm going to try to just do that. And at that point, I'll be like, this is guaranteed for 20 years. Now, this is just where we're starting, because I think that you all need more than this. You know that you need more than this. But this is a good start, because God forbid, Graham, if you died tomorrow, you really need a lot more coverage than this. I mean, you need a lot more than the mortgage, but baby steps, right? And this will at least lock you in for 20 years. Because like I said, I mean, if you did have any sort of health issues, you don't have to worry about that. As time goes on, you can afford more. We can get you more. And I've had just this past year, probably 5 different clients that I sold the year before that had called me up and like, we're ready. We need more coverage. We're ready to increase, because I did that.
Right.
So anyway, all right. Well, we're getting up. Any other questions? Anybody have any questions on all this?
How do you, so we went through the, 70. Okay. And then, do you show them the 3 options, or do you, like, when
so
they're,
now that I got the budget generally, now I'll show them something right up, maybe a little bit higher than $75, something a little bit.
So how do you
right around 75, them? Something around 50. And I mean, that's probably the lowest I'll go, but I'll give them an out, just an accidental death. I'll probably start with accidents. So the first thing I recommend, because you guys are so young, is that we cover this full mortgage in the event of an accident. That's only going to be like $20 a month. And I write that at the top of the sheet. And then the next thing is covering, let me show you. See if I can find
you ever get any pushback with the social or the banking account information?
No. And I did when I was new. Okay, so this, that's not a good example. Trying to find one where I sold an accidental, which I do it, or I present it in a lot of homes. All right, so this one, obviously I sold a prosperity policy on. This was the back of the lead I presented. I don't know if you can see this. It says 200,000 accidental death is $39.73 a month. And then in his case, he had to do prosperity because he had health issues. So I showed him 35,000, which equals 2.5 years of mortgage payments, was 159.81. 30,000 was 2 years of mortgage payments, was 137.81. 25,000, and then I showed him an out. Well, actually, my out is really an accidental policy. These guys, I remember the wife. They took this the 30,000, 137, and the accidental, so it ended up being almost $200. So That's all it showed.
Yeah.
And I got the budget out of them
What?
before that. They said they wanted to keep it around to
I
under
got it in my
$200.
headset. What are you talking about?
Huh?
Dad, mute your line. It's Brad again. Jesus, it's like the Progressive commercial, you know.
Yeah. Yeah. When you start becoming your parents.
Yeah, it's like dad wouldn't even have to audition for that stuff.
I love that. The one about talking about leaving before we go to the game.
Yeah.
We're not going to talk about parking lots.
Oh, Brian and Produce, great guy.
Yeah.
Very helpful.
Okay.
Bet they make a fortune off these parking spots.
Yeah, the parking. We're not going to talk about parking spots.
I think we made Cassidy mad. She left.
Oh, really? I don't think they're even awake. But anyway, I'm glad that at least you're getting something out of this. And I hope that everybody else is, because you really need to, if you're selling even final expense, it's not much different. We probably don't need to go in as much depth, but you still got to cover all the, and even so the way I show those products, I still show this this form. I fold it in half right here. And I still go over this because it's still important to make them understand how it works. And I just say, like, this is not the Term Life Express. This is actually a permanent policy. I use the same thing. I mean, it's just showing, it's having something to show them. Now, if you actually have the brochure from the company, like the Prosperity one, I do have, so I'll just use their brochure. But just explaining how it works is just crucial in making sure that they understand how it works. They can, if they don't, they can ask you questions, and the policies are going to stay on the books. That's the fact. I've got like I think like a 95% persistency with life insurance sales. I think, and it's because I'm very thorough, and I don't spend more than an hour and a half, usually an hour in a home, but you got to hit all these steps. And when you do it right, they just line up. And then they're like, what? Oh, you asked about the social. No, I did when I was new. And here's one of the tips I'll give on that. First of all, when I say, okay, so they've decided on the price, they're going to do $75 a month for 100 grand. All right. So next step now, Graham, is we got to apply. That's all we can do today. You can't pay for anything. All we can do is send this application. And make sense?
Sure.
That sound good?
Yes.
Okay. Then I go, all right. So first of all, your first name's Graham?
Yes. First legal name's Graham.
Last name's Hugel?
Uh-huh.
Okay. Do you have a driver's license?
Yeah, it's 7889311.
Okay. And what's your social?
123456789.
All right. And this, obviously your address just keep going. Now, when I used to have problems with it, one thing I noticed, first of all, asking it and looking at them is a big no-no. Make sure when you ask that question about the social, keep your head down. Don't look them in the eye at that point. It freaks them out.
One thing I get sometimes, does it have to come out of the bank?
Yeah, now that I do get that fairly frequently. And
I just got so much stuff coming out. I don't really like that.
Yeah, yes, it does. Now you can pay quarterly or annually if you want to mail a check in, but yeah, it does have to be the auto draft. Now you can pick a day. Is there a certain day that's better than others?
Yeah, I mean, that's really usually when kind of the deal's done, but I kind of, how do you normally overcome that?
Well, that's what I'm saying is how there's different tiers of like how much they care about that. So sometimes they'll be like, does it have to be a bank draft? And if I just say yes, they just say okay.
Okay.
Then if they follow that up with like, no, we absolutely not doing bank drafts. I had a problem. We don't do bank drafts. I'll look at the wife as like, he doesn't do bank drafts. you know, that type. That's where you're like, all right, this guy does not do bank drafts. So, okay. So here's the thing. And I go through the whole, like, this is why they do it this way, because if you set it up, if you pay monthly, then if you're in a hospital, if you're laid up, if you are dying, and not to be too morbid, but this is the reality, and you're sick, this policy would lapse because you're probably not focused on paying every bill on time. And if you don't go home and pay your mortgage bill or your life insurance, they'll argue that it lapsed, and they could deny the claim because you didn't pay it. You may say that wouldn't happen. Trust me, when you're dying and you're in the hospital, the last thing you're thinking about is paying your bills. And I mean, maybe you get lucky and pay it, but that's why they do the auto draft, because you don't have to think it's just going to come out automatically. And now, is that still a problem? Yes, we're not doing bank draft. We will never do a bank draft. I'd rather be dead. All right. Okay. So we got a couple options. First of all, we could do the first payment that you make. Just write it out for a check. And what we can do is, after that first payment, the first monthly payment, then we'll switch it to quarterly. Can you do that? Can you pay quarterly right now? Because if you set it up quarterly, we don't have to do a draft. You want to do quarterly? Usually they say no. Like usually, like, we don't have that. We can't pay quarterly right now. I'm like, okay, so can you pay it next month? Quarterly.
Yes.
Okay, so with this is what we'll do. We'll set this up monthly. You write a monthly check. The first month only will come out like a draft. That's just the first month. We're just writing the check. And then the next, when it comes around to the next billing cycle, we'll switch it to quarterly. All right. So just make sure that you prepare. Then it'll be every 3 months you get a bill. Is that good? And here's what happens. That usually satisfies them. And then what's funny about how crazy these people are is that I never change it. After the first month, I'll call them and tell them I got approved. I'll be like, that first payment's coming out. And now you mentioned that you wanted to switch it to quarterly. And do you guys still want it? Nah, I'll just leave it. It's bizarre how not most of the time that's how that works.
Yeah. Okay.
Very, very few they'll like actually want to go through the because what they're saying, they just don't trust you at that point. That's it. And once they know that they got the draft, that like it went through, they got the policy, you did what you said you were going to do, your trust level with them goes like sky high. They actually trust you now. And so it's okay taking money out of their account because they know that you are really legit. That's really all. Okay. That's really all they're telling you. Because I mean, that's just the way business is done these days. Like if you can't handle a bank draft, it's becoming rarer and rarer that people are out there that just cannot deal with it, because it's like that's just everything is done automatically. All right. But anyway, if you got any of those, I mean, feel free to ask. But if
yeah, I'm good, man. Thanks, Drew.
Yeah, hope that helped everyone. Y'all have a good weekend. See you.